For the next session, very happy to introduce Changpeng Zhao, the former head of Binance, almost universally known instead as CZ. We're going to be discussing crypto in transition and the big themes of the conference, legitimacy, trust, and the future. CZ, welcome. So it's been a bit of a roller coaster few years for crypto. I think one of the kind of most important trends for me is we're seeing now financial institutions that used to maybe rubbish the sector enthusiastically adopting it. I think, for example, a few years ago, Jamie Dimon of JP Morgan said, I would fire any trader who was engaging in crypto because it would show their apparent lack of financial savvy. And obviously JP Morgan is now enthusiastically offering crypto products. But at the same time as that has happened, people are kind of very much aware of scams that have proliferated, the risk of kind of fraud and financial crimes. And, these always hit the headlines and kind of pull the perception of the sector in the other direction. Do you think crypto has earned its legitimacy yet, or is there still some way to go?
Okay, so there's quite a bit of topics there. First of all, it is definitely a few roller coaster years. That's probably an understatement. And I think overall, there is quite a bit of misconception about crypto with illicit activities, etc. So every time something bad happens using crypto, then it's headline news. But if you actually look at the numbers, the percentage of transactions that are bad in crypto is extremely low. I think it's less than 0.1% or something. Whereas in traditional finance, the percentage is 2 to 5%. So we're talking about and the traditional finance size is much bigger. So there's a few factors contributing to it. Crypto is actually extremely traceable. The anonymousness of crypto is a fake claim. It doesn't exist. Today, the law enforcement can trace blockchain. Blockchain is a permanent public record. And then the law enforcement, if they can get data, which they can request from a licensed centralized exchange, which there is, then you can pretty much trace most of the transactions. So it's actually much easier to do law enforcement using blockchain. So that's why actually a lot of the illicit activities don't happen on blockchain now. It's much easier to do it with cash, to use like the underground, even through banks. If law enforcement have to get banks across different countries to cooperate, it takes a lot of effort. So, but right now the headline news, the traditional media still want to portray the image that crypto is bad, et cetera, et cetera. So I think right now more and more people are understanding it. And I think, so that part is less of an issue in practice. The stronger legitimacy comes from the US government adopting crypto now. Right. So, and now with US having a pro-crypto administration, every other country is finally turning around. And Bahrain was ahead of that, right? Bahrain was always pro-crypto, even during the Biden administration. But now the US is turning around. So that really helped to create a lot of what traditional people call the legitimacy. So that's changed quite a bit. Yeah. And now we see, as you said, we see institutional adoption into crypto a lot stronger. Even Jamie Dimon, JP Morgan, BlackRock, institutions in China, in this part of the world, so in Bahrain, UAE, it's all happening. So I think there is definitely much stronger legitimacy. And people don't question that, if there's going to be is Bitcoin a scam anymore? Right, so there are still other cryptocurrencies which are questionable. There's millions and millions of them, so not all of them will be successful. But the mainstream, the sort of major cryptos, people don't question them as much.
Mm-hmm. One of my favorite books about finance is Reminiscences of a Stock Operator, which in the kind of late 19th or early 20th century is already writing about all of the scams that we see we see some scams in the crypto sector, but we've always seen these scams in financial markets.
Yeah, so the random walks, you can throw a dart at a newspaper kind of thing. But that's how innovation's made. Yeah. So there has been more than millions of internet companies that tried, and only a few large ones exist today. But you can't have the few large ones start and not have the other ones. They just won't be successful because the failed startups actually taught us lessons. They tried different things. They tried products. That's just part of innovation, right? So only a few small will succeed. There will be a lot of failures, but in the internet space, it's less impact financially. So people say, okay, so it's less impact. In crypto, so there's successful projects. There are startups that fail, like legitimately, and there are real scams. Like there are people who they're frauds, there's stuff like that. That's always going to happen. But it doesn't delegitimize the whole industry. That's just a few bad players.
Yeah. Now, regulatory scrutiny has sharpened a lot over the past few years. I hope you don't mind me saying you've had first-hand experience of this.
For sure.
And the kind of sharp end of it. Could you talk a little bit about that period, about the kind of like lessons that you learned and what kind of people here who are setting up should learn from it?
Sure. I think the biggest lesson is always respect the government. I think regardless of whether pro-crypto or anti-crypto, you just got to respect them. They are extremely, especially the US government, they're extremely powerful, and they have extremely strong enforcement ability, and they act very slowly. What I didn't realize is the things they were talking to me about problems were happened 6 years ago. Right? I was like, okay, you could have told me then, but they were like, no, we didn't have a channel to tell you. So it happened much later. If they told me much earlier, the scope would be much smaller, and etc. So I think that's something I learned the hard way, which is we got to work very closely with governments. We got to work very closely with the regulators. I thought I did. I thought I tried. But in smaller countries in well-organized countries like Bahrain, we have a conversation. So we know what they're happy with, what they're not happy with. We can change. In large countries, you don't have a conversation, right? So that you do your stuff, they come back 5 years later. They come to you 5 years later. So, but no, that's just how the system works. I'm not complaining about that. I'm just saying look, that's how we gotta operate. Now, especially the crypto industry is much larger. We're moving much more higher volumes of money, and there's more institutional adoption. So that part is even more critical. So I think that's basically the lesson learned. The good thing now is the governments actually, even in larger countries, are starting to take very serious looks at cryptocurrencies. And I would say now some of the small, medium countries are approaching me or us to ask questions and to try to get our feedback, etc. The larger countries are still a little bit less engaged, but the larger countries they're just busier. Yeah.
You've already kind of brought on to one of the big themes here, which is the kind of the different speeds that regulators in different parts of the world are moving at. Where do you see kind of the greatest opportunities? And you said big countries tend to be moving slower and small countries tend to be moving faster. But kind of where in the world is it that you see the kind of the regulation evolving in the most encouraging way?
Yeah, so I'm actually not saying this because I'm here. I actually think Bahrain is one of the leading regulatory bodies in the whole space, but many people don't know about it. And I think UAE is very strong as well. Abu Dhabi, Dubai, they're very forward-thinking as well. But I think Bahrain especially, for example, in UAE, you have multiple regulatory agencies, right? You have Dubai versus Abu Dhabi, friendly competition, but there's some competition. You have the IFC, you have VARA, you have, that's in Dubai. Then you have ADGM in Abu Dhabi, you have ASCA, that's securities. So there's many multiple agencies you've got to work with. Here, at least based on our experience, you work with one agency, which is a central bank, and they regulate both crypto and banks. Much easier to work with, and they're much more knowledgeable as well. So and also to regulate crypto, you can regulate it in a small country, but the business can be international, right? So that's crypto has no borders. Bitcoin sits in a wallet. It doesn't belong, in traditional finance, you wire money from a bank in UAE to a bank in Bahrain. Before that, the money was in UAE. After that, the money is in Bahrain. In crypto, you buy Bitcoins in UAE, I fly here. I don't have to make any transfers. I have my Bitcoins with me. And the business is much more international as well, right? So, you still have to do different countries, KYC, etc. But there's no reason a small country cannot serve the world. And then the platform collects revenues and pay taxes on those, and those revenues contribute to the local economy. And then the platform hires people locally, brings people internationally in, and all of those are direct contributions to the local economy. So I think a lot of those things are happening. I was just talking with a couple of friends there. I think Bahrain does not quite get the international exposure it deserves. So we would love to help in any way we can. Yeah.
Thank you. How do you see, as you kind of think about central banks' role in this, We have for the past few years been talking a lot about central bank digital currencies. It now seems to me that a lot of the roles that they were thought to be necessary for in kind of settlement, trust, kind of payment rails, a lot of those roles are now being fulfilled by stablecoins, and in particular dollar stablecoins. What do you see happening in the CBD space for kind of crypto to evolve? Are CBDCs essential? Are they something that's going to kind of coexist alongside kind of privatized settlement mechanisms, or do you not see a need for them?
Yeah. So again, I think those are labels people put on the. So CBDC and stablecoin are two labels. Different people have different definitions of it, but generally it is understood that stablecoins are usually issued by a commercial company, and it's backed by a fiat currency. And CBDCs typically the understanding would be, okay, it's issued by a central bank. It has a lot of monitoring and surveillance capabilities on top of it, which is good for the central bank, but also there's privacy concerns and there's usability concerns. So at the end of the day, it doesn't matter which one. I think a CBDC can be made so that it's easy to transfer on the blockchain. It's fairly open. Let's say, look, a central bank issues a CBDC. If any crypto exchange in the world can just use that blockchain and accept that currency, then that's great. But if every exchange needs to go through an application process to accept it, then your adoption will be much lower. If stable coins, any wallet on chain can transfer to any other wallet, that's great, right? And if the CBDC can do that too, there's no reason CBDCs cannot do that. If it's just as easy to transfer, then it's okay. Then it's great. But if everyone have to fill a form to be able to transfer some tokens, then people are going to use a stable coin. So the label matters much less, whereas the ease of use, the fee of transfers, the convenience, and the freedom is really important. So there's no reason a CBDC cannot be fully adopted globally. So I do think that looking a little bit more forward ahead, I think today the stable coins are growing because they're so easy to use, right? So, and they're so cheap, they're so fast. But once every country issues a stable coin, or actually every currency there will be multiple stable coins. Once you have a stable coin, the stable coin will trade on the blockchain. And the blockchain trades 24/7. And then I actually think in the future, the FX rates internationally will be determined on the blockchain, right? So because right now FX rates, if you trade FX, it's like RFQ on a Bloomberg or Reuters terminal, and then it's very opaque. So the pricing power should be determined in a transparent way on the blockchain. If the central banks want to maintain the pegs, they will, because those stable coins will peg to the fiat currency. Once we have all the stable coins on chain, the next step will be central banks will say, like, why do we issue a fiat currency for other people to issue stable coin? Why don't we just make our CBDCs more user friendly? So I think that step will come. Again, not every country will move at different speeds. And then if you look at USDT, right? So or the stable coins in the cryptocurrency today, 99% of that is US dollar based. That increases the usage of US dollars. That increases the usage of US dollar dominancy in the world. Every country wants their currency to be used more. Why not, right? And that so the more people who use the stable coin, the more reserves you kind of have in that currency. So it helps to increase the reserve of that currency. So economically, every central bank should promote their stable coin, their CBDC, and those two are not competing. Those two, you want to have as much of those two as possible. And at some point, you will say, look, we're going to rein in the stable coins and issue more CBDCs potentially. But again, that depends on the market adoption of that depends quite a bit on how easy it is to use. So in my head, there's CBDC versus stable is just two different labels that we apply. It's the same thing. It's very similar things.
I have to say, as a former FX trader myself, it's bizarre to me how many FX trades still happen over the phone in the early hours of city trading. But we are rapidly running out of time. So I just want to ask you one last question, which is looking at crypto, looking at digital assets, looking at this sector. What are the parts that you're most excited about over the next few years?
I think there's so many different things happening in crypto now. It's no longer one specific sector. So I think right now, like we're seeing that a lot more trading is happening on chain, on DEXs, decentralized exchanges, and the centralized exchanges are still doing really well. We're seeing more stable coins, more RWAs, more AI stuff happening on chain, on the blockchain. I think AI is going to drive crypto like crazy. AI will facilitate like 1,000 or 1,000,000 times more transactions for everyone in the world. So the amount of transactions we're doing today, we're going to multiply. AI is going to multiply that by 1,000,000. And AI is going to do micro transactions. So and AI can only use the blockchain. They're not going to be able to use credit cards. They're not just the credit cards designed to block AI, right? So a blockchain is designed to be automatic. So there's many different things happening. I think. Also on the topic of AI, we can see the growth of AI happening really quickly. They got like a couple hundred million users within a couple of days or weeks or months, whereas the blockchain growth has been by user numbers have been super slow. It took like 10 years to get to like 200-300 million users. So we're still early. But the financial impact of the blockchain industry is much bigger than the AI industry. So AI is good for as a tool, but finance will happen on the blockchain. So I think there are many different areas for growth. I'm always fairly quite bullish.
Thank you very much. CZ, thank you so much for joining us.
Thank you so much for having me here.
Thank you.